In life, sound money management is essential. It is simple to become obsessed with daily costs while delaying more significant goals like emergency savings or retirement savings. Spend some time thinking about how you might manage your money better in order to ensure your financial stability. Here are 10 personal finance tips that can change the way you think about money. Before starting, don't forget to like and subscribe to the Financial Tech channel for more future updates. So let's start. Number 1. Tracking your spending. One of the most important steps to achieving financial success is keeping track of your expenses. Knowing exactly where and how much of your money is being spent is the first step towards taking control of your finances. You may gain a clear view of your financial situation and make well-informed financial decisions by keeping track of your spending. There are various methods for keeping track of your spending. You can use a budgeting tool, a spreadsheet, or just paper and pen. Regardless of the route you choose, make sure to record every dollar you spend on items like meals, bills, entertainment, and anything else. Keeping track of your income is equally important for comparing your expenditures to your income and ensuring that you are staying within your budget. Number 2. Making a budget and sticking to it. The next step after keeping track of your spending is to create a budget. An organized plan for how much money you will spend and save is a budget. It should contain a forecast of your monthly financial condition as well as a list of all of your income and expenses. By creating a budget, you can be sure that you are handling your money appropriately. Make a list of your financial goals before you create your budget. These should be reachable and could be both short-term and long-term. For instance, you might want to save money for a down payment on a house or pay off your credit card debt in a year. Setting financial goals keeps you accountable and motivated to stick to your spending plan. Once you've decided what your goals are, it's time to create your budget. Making a list of all of your expenses comes after first figuring out your monthly revenue. Include all expenses, both fixed and variable, such as rent and utilities, as well as variable costs like meals and entertainment. Calculate your leftover funds by subtracting that amount from your revenue after listing all of your expenses. While creating a budget is important, sticking to it is much more important. Once you've prepared your budget and determined how much money you have left over, it's time to start living within your means. Try to remain within the budgeted amounts for each purchase to avoid going overboard with your spending. Number 3. Paying yourself first. When it comes to managing your money, it's imperative to pay yourself first. Before paying any bills or other outgoings, you must save and invest a portion of your monthly income. You can save money for the future and ensure that you are prepared for any unanticipated bills or disasters by prioritizing your own needs. How much you should save depends on your financial goals and your current financial situation. If you have debt, you might want to prioritize paying it off before you start saving. You can start saving some of your money when you have paid off your debt. If your income increases, increase your monthly savings by at least 10% to 15%. Number 4. Automating your finances. One of the best ways to keep control of your finances is to automate as much of it as you can. You may save time and effort while also guaranteeing that your savings are made each month and that your bills are paid on time by automating your finances. You can set up automated payments to make sure you never forget to pay a bill. You can also set up an automated transfer from your checking account to your savings account each month to avoid having to remember to physically transfer money. You can make sure that your bill payments are completed on time and that you consistently save money each month by automating your accounts. Benefits of tax-advantaged accounts. Tax-advantaged accounts allow you to save money while reducing your taxable income. These accounts include 401 and IRA retirement accounts, 529 college savings plans, and health savings accounts. By making contributions to these accounts, you can reduce your taxed income and save money for the future. Before making a donation to a tax-advantaged account, it is essential to understand the rules and regulations. For instance, there are annual contribution caps for 401k and IRAs, and some accounts need a certain level of income before you may contribute. Make sure you are familiar with the policies of any account you are considering using before making any donations. Number 5. Investing for the long term. Investing is a great way to build wealth and set money aside for the future. Since the process of investing might be difficult, it's imperative to finish your homework and understand the fundamentals before you start. When investing, having a long-term strategy is essential. The aim of investing should be to build up wealth over time rather than to earn a quick profit. With the intention of holding your investments for at least 5 to 10 years, think about investing in a variety of assets, including stocks, bonds, mutual funds, and exchange-traded funds, ETFs. It's also important to consider diversifying your holdings. One can make sure their portfolio is diversified in the event that one asset class performs poorly by investing in a variety of assets. You can reduce risk and make sure your portfolio is balanced by diversifying your holdings. Number 6. Shopping around for the best deals. Shopping around for the best deals is one of the simplest ways to save money. Always compare prices before making a purchase, whether it be for apparel, furniture, or groceries. By comparing prices, you can find the best offer and ensure that you're receiving the most value. While comparing prices, it is critical to take other factors into account. Consider the product's build quality, return guidelines, and any additional features that might be important to you. It's a good idea to use bargains and coupons because they can help you save more money. Number 7. Don't be afraid to say no. When it comes to managing your money, the ability to say no is crucial. By declining useless purchases and expenses, you may be able to cut prices and stay within your budget. When you're tempted to make an impulsive purchase, pause to determine if it is actually necessary. Examine your true need for it as well as how it will fit into your budget. If it's not necessary or you can't afford it, it's alright to say no. Number 8. Staying informed about financial trends and news. For effective money management, being current on news and trends in finance is essential. By staying informed about what's happening in the financial world, you can make wise financial decisions and stay on top of any events that might have an effect on your financial situation. Make sure you stay up to date on financial news and trends by reading the news, watching the news, and following financial gurus on social media. You'll be able to make wiser financial decisions and ensure that you are informed of any developments that could affect your finances by doing this. Number 9. Live without credit cards. It's possible, but it requires a lot of planning and restraint. The first step is to create and follow a budget. To guarantee that you are not going over budget, this requires keeping track of all of your income and expenses. It also involves setting aside cash for unforeseen expenses and emergencies. After you've created a budget, you may start looking for ways to reduce expenses. This may entail cutting back on unreasonable expenses like eating out or buying new clothes. Finding ways to save money on needs like buying generic brands or shopping sales could also be included. Another way to manage without credit cards is to use cash or debit cards instead. This will help you resist temptation and help you keep to your budget. Another choice is to use prepaid cards, which resemble debit cards but are not linked to a bank account. This is a great solution if you want to manage your expenditure while still having access to money. Finally, it's crucial to give financial education top priority. This requires learning about budgeting, saving, and investing. It also requires understanding the risks connected to credit cards and how they work. By using sound money management practices and prudent financial decisions, you may live without credit cards and stay out of debt. Number 10. Make financial education a priority. More than anyone else, young people need financial education. Lessons in budgeting, saving, and investing may aid children in developing sound financial habits that will benefit them as adults. Both parents and schools may teach young people about money matters. It is feasible to avoid using credit cards, but it requires careful planning and restraint. By creating and sticking to a budget, utilizing cash or debit cards instead of credit cards, and placing a high priority on financial education, you can survive without using credit cards. If you adopt the right approach, you could achieve financial independence and live a debt-free life. This is it for today's video. What do you think of our video? Let us know in the comment section below. Don't forget to like and subscribe to our channel for more future updates. Thanks for watching.